Welcome. Take your seats, dust off your thinking caps, and join me on another grand adventure into the world of business and investing. Today, we are not chasing the loudest headlines or the flashiest new technology. No, today we are slowing down to appreciate a company that, much like a sturdy grandfather clock, has ticked along steadily through decades of change. A company whose work hums quietly behind the scenes, keeping industries, cities, and even our own cars and gadgets running smoothly. We are talking about Texas Instruments. Yes, the very same name that once graced your trusty school calculator, but there is so much more beneath the surface. In this episode, we are going to unpack the strengths, the weaknesses, the opportunities, and the threats facing this curious titan of tiny things. Along the way, we will sprinkle in a few stories, share a few numbers spoken properly. Mind you, no gobbledygook or symbols. And most importantly, help you understand the true shape of this company. Now, remember, we are not here to sell or to frighten. We are simply here to observe, to think carefully, and to build a wiser view of the investing world. So, tighten your shoelaces, refill your cup of tea, and let's begin our journey into Texas Instruments. Texas Instruments. Now there's a name that might conjure up memories of those trusty calculators we all used in school. But let me tell you, this company is much more than just buttons and screens. It's a cornerstone of the semiconductor world, quietly powering the devices and systems we rely on every day. You see, Texas Instruments, or TI as it's often called, has been around since the 1930s. That's nearly a century of innovation and adaptation. They started off in the seismic industry, believe it or not, and over time they've transformed into a leader in analog and embedded semiconductors. These are the unsung heroes of electronics, converting real-world signals like temperature and sound into digital data that devices can understand. Now, let's talk about their products. TI's chips are everywhere. From the car you drive to the industrial machines that build our infrastructure, their semiconductors are integral. They're not flashy, but they're essential. And that's the beauty of it. TI focuses on long product life cycles, meaning their chips stay relevant for decades. This is especially important for industries like automotive and manufacturing, where stability and reliability are key. Financially, TI is as solid as they come. In the first quarter of 2025, they reported revenue of over $4 billion, surpassing expectations. Their earnings per share stood at $1.28, indicating a robust financial position. What's more, they're projecting even higher revenues for the next quarter, signaling strong demand for their products. Leadership plays a crucial role in any company's success, and TI is no exception. Haviv Ilan, a veteran with over 2 decades at the company, took the helm as CEO in 2023. His deep understanding of the company's operations and culture ensures continuity and a clear vision for the future. But what truly sets TI apart is their commitment to manufacturing. While many companies outsource production, TI is investing heavily in building and expanding their own facilities. They're constructing new semiconductor plants in Texas and Utah, a move supported by up to $1.6 billion in funding from the US government under the CHIPS and Science Act. This strategy not only ensures quality control, but also strengthens their supply chain resilience. In summary, Texas Instruments' strengths lie in their essential products, solid financials, experienced leadership, and strategic investments in manufacturing. They're not just a tech company, they're a cornerstone of the electronic devices we rely on every day. Now, let's turn our attention to the challenges that Texas Instruments faces, a company that's been a stalwart in the semiconductor industry for decades. While their legacy is impressive, even the most seasoned players encounter hurdles in an ever-evolving market. One significant concern is the cyclical nature of the semiconductor industry. Demand for chips can fluctuate based on various factors, including economic conditions and technological advancements. Texas Instruments, with its substantial exposure to industrial and automotive sectors, is particularly susceptible to these cycles. For instance, recent reports indicate that the company has been grappling with weaker demand in its key industrial and automotive markets, leading to pressure on margins and elevated capital expenditures. Moreover, the company faces intense competition from other semiconductor giants. Firms like Analog Devices, Microchip Technology, and NXP-NC Semiconductors are constantly innovating, striving to capture greater market share. This competitive landscape necessitates continuous investment in research and development, which can strain resources and impact profitability. Another challenge lies in the geopolitical arena. Trade tensions and tariff uncertainties, especially between the US and China, have introduced a layer of unpredictability. For example, recent changes in China's tariff regulations have impacted US semiconductor companies, including Texas Instruments, leading to stock declines and necessitating strategic adjustments. Furthermore, the rapid pace of technological change means that staying ahead requires agility and foresight. Texas Instruments must continuously adapt to emerging trends, such as the rise of artificial intelligence and the Internet of Things, to remain relevant and competitive. In summary, while Texas Instruments has a strong foundation, it must navigate the complexities of market cycles, fierce competition, geopolitical uncertainties, and rapid technological advancements. These challenges underscore the importance of strategic planning and adaptability in maintaining its position in the semiconductor industry. Now, let's explore the opportunities that lie ahead for Texas Instruments. While they've long been a stalwart in the semiconductor industry, the current landscape presents new avenues for growth and innovation. First, consider the automotive sector. As vehicles become more advanced, the demand for semiconductors increases. Texas Instruments analog and embedded chips are essential for electric vehicles, autonomous driving systems, and advanced driver assistance features. This sector alone presents a significant growth opportunity for the company. Next, the industrial sector is undergoing a transformation with the rise of smart factories and automation. Texas Instruments products are crucial for sensors, control systems, and power management in these settings. As industries seek efficiency and precision, the company stands to benefit immensely. Moreover, the global push for renewable energy and efficient power management opens new avenues. Texas Instruments' expertise in power-efficient chips makes it a key player in solar energy systems, smart grids, and energy storage solutions. Additionally, the expansion of 5G networks and the Internet of Things means more devices requiring reliable semiconductors. Texas Instruments' broad portfolio positions it well to supply components for everything from smart home devices to industrial IoT applications. Now, let's delve into the challenges that Texas Instruments faces in today's complex landscape. While the company boasts a rich history and a robust portfolio, it's not without its hurdles. One pressing issue is the evolving geopolitical climate. Recent shifts in trade policies, particularly between the US and China, have introduced a layer of uncertainty. For instance, changes in China's tariff regulations have impacted US semiconductor companies, including Texas Instruments, leading to stock declines and necessitating strategic adjustments. Additionally, the semiconductor industry is inherently cyclical. Demand can fluctuate based on various factors, from global economic conditions to shifts in consumer behavior. Texas Instruments, with its significant exposure to industrial and automotive sectors, must navigate these ebbs and flows carefully. Supply chain disruptions also present a formidable challenge. The complex web of suppliers and manufacturers means that any hiccup, be it due to natural disasters, pandemics, or logistical issues, can ripple through the system, affecting production timelines and costs. Moreover, the rapid pace of technological advancement means that staying ahead requires continuous innovation. Competitors are constantly developing new technologies, and Texas Instruments must invest heavily in research and development to maintain its edge. Lastly, regulatory changes and compliance requirements can impact operations. Adapting to new laws and standards, especially in different international markets, demands agility and foresight. In summary, while Texas Instruments has a strong foundation, it must remain vigilant and adaptable to navigate the multifaceted challenges of the global semiconductor landscape. Now, as we wrap up our exploration of Texas Instruments, let's consider whether it's a worthwhile investment. Remember, we're not here to sell or promote, but to understand. Texas Instruments, or TI, has long been a stalwart in the semiconductor industry. Their focus on analog and embedded chips places them at the heart of many essential technologies, from automotive systems to industrial machinery. Their commitment to manufacturing, with significant investments in facilities in Texas and Utah, demonstrates a long-term vision for supply chain resilience. Financially, TI has shown robustness. In the first quarter of 2025, they reported revenue of over $4 billion, surpassing expectations. Their earnings per share stood at $1.28. Moreover, they're projecting even higher revenues for the next quarter, signaling strong demand for their products. However, it's essential to acknowledge the challenges. The semiconductor industry is inherently cyclical, and TI is not immune to these fluctuations. Geopolitical tensions, particularly between the US and China, have introduced uncertainties that could impact future performance. Additionally, while TI has a strong presence in analog and embedded processing, it has limited exposure to high-growth areas like artificial intelligence and advanced computing. In conclusion, Texas Instruments presents a mix of stability and potential. For investors seeking a company with a solid foundation and a clear long-term strategy, TI might be appealing. However, it's crucial to consider the broader industry dynamics and geopolitical factors that could influence its trajectory. As always, thorough research and consultation with financial advisors are recommended before making investment decisions. And there we have it, ladies and gentlemen. Our journey through the story of Texas Instruments comes to a close. I do hope you enjoyed wandering through the world of circuits and semiconductors with me. If you found it useful, or even just mildly entertaining, do consider joining us again for another episode. Until next time, keep your curiosity sharp, your thinking steady, and remember, Investing is a little bit like gardening. It takes patience, attention, and a willingness to learn a few lessons from the weather. Thank you ever so much for watching, and take very good care.